The National Association of Realtors sounding the alarm. If the economy continues to show strength and the Federal Reserve hikes rates again, we could see 8% mortgage rates. Our next guest says that is bad news for housing demand. Joining us now to talk about housing affordability is Logan Mohtashami, HousingWire lead analyst. Logan, great to have you with us. It seems like a lot of things start to happen even when mortgage rates are at 7.2%. I mean, people are less likely to buy because affordability is terrible at this point. And I would imagine that it also puts in a difficult position home builders, which had been buying down mortgages. It just makes the whole venture a lot more costly and pressures margins.
Well, first world problems, the economy is doing well, and because of that, mortgage rates are rising. But definitely, when mortgage rates got past 6% last year, we had the biggest home sale crash ever in history. The builders have been very creative on pushing rates down, but that could only go so far. So, of course, right now we're dealing with higher home prices and higher mortgage rates. It's a very savagely unhealthy housing market, and not much is going to change unless mortgage rates start coming down because, 5 of the national home price indexes are at all-time highs currently.
What are you forecasting in terms of mortgage rates? This is, we cite usually the average rate, but this is for people who have average credit scores? I mean, plenty of Americans are already seeing 8% when they are quoted when they go for a loan.
I'm a 10-year yield guy, so if the economy stays firm, bond yields can keep on rising higher. I think the Fed is very happy with real yields where they are right now. So if the economy stays firm, rates could stay up here. But the bad side is nobody's moving, right? New listings data is trending at the lowest levels ever. So a lot of people are just waiting until mortgage rates come down a little bit lower to, maybe do their transaction. So the higher the rates go, the lack of new listings data should stay with us. So it's a waiting game. And you have to remember, the Federal Reserve is trying to help the economy by pushing rates up. Credit cards are going up, car payments are going up. The best hedge not only against inflation is your 30-year fixed mortgage, but your best hedge against the Federal Reserve was your 30-year fixed mortgage. A lot of homeowners are just sitting with very low total housing costs. That doesn't change unless mortgage rates come down or home prices fall. And inventory is too low to have any kind of major home price crash anytime soon.
So at what point, Logan, do we need to, are we going to see a significant slowdown? You mentioned, way back when we saw a jump in rates to 6%, that we saw a crash. Where's the crash now? Is that going to happen? I mean, because ultimately bad news is good news in a way. A crash can actually put more,
units
people in the market.
Here's the confusing part for a lot of people. Housing costs are more expensive this year. However, home sales aren't crashing anymore. My theory is that we got down to 4 million. It's really rare in America after 1996 to get existing home sales under 4 million. So we've killed the marginal home buyer. What is left is really the prime home buyers that are left in America. Home sales should be going lower, but the velocity of the crash just isn't there yet. You're probably going to need much higher rates for something like that to occur. But we already crashed in sales last year. So I think that's the confusing part, because it's more expensive to buy a home now than last year, and home sales are pretty much kind of stuck. But we have to realize we have over 156 million people working. 4 million monthly home sales isn't that much. So in that context, hopefully that explains why home sales aren't crashing anymore.
What are rents doing in this environment?
Well, the growth rate of rents are slowing, but again, that's just the growth rate. Rent inflation is still very high. It's just that in a lot of places you're starting to get more supply. That's good. That's a positive. Hopefully all those apartments that are under construction comes onto the market. The best way to deal with inflation is always supply. So you're going to have choices for a lot of people where they need to be in shelter, and more supply will cool down the growth rate of rents, but it's not like major rental deflation nationally. We rarely get rents going negative on a national basis post-World War II. So you alleviate some of the rent inflation, but we have to be realistic here. It's not like rents are dropping nationally in a very big way.